afternoon. How are we all doing? Happy whatever day it is. Tuesday. Forgot what day it is. Right. So I'm in the middle of a brain process with programming. I'm just coming out of programming mode, so my brain's not actually kicked in yet. No news today to look at. All done. No news this morning to look at. The only thing we've had really is the Canadian trade balance, which didn't really do an awful lot. So nothing much changed since this morning. So we haven't had any news overnight. There's nothing exciting happened with ADRs or anything this morning. We've had one ADR on Aussie New Zealand, which is just still sitting down there. And we've had one RSI extension on Aussie New Zealand on the 4-hour. That's it. Nothing's moving. So basically, we're still exactly where we were this morning for any of you that were in the live room this morning. So very, very dull at the moment, isn't it? Morning, afternoon, Novelty, Ian, David, Crom, Fletch, Danny, Christian, Gregors, Igosa, Virginia, Mumo, Kennelly, Dion, Sarah, Yoko, Amy, GC. How are we doing? So yes, just crap at the minute. It's just market's just not moving. We are just not moving. Everything is sideways, totally sideways. We're just stuck in all these little ranges and we're just not going anywhere. This week is so far is just totally sideways. A little bit of strength on the yen again this morning, but not, just not enough. Not enough of anything. It's just sideways. Look, it's even contracting. Look, it's actually contracting. We're going sideways for 5 days and getting tighter. We're waiting for something. Something is going to explode this week. I don't know when or what, but something is going to go. So got out Euro Yen this morning for those that weren't in the live room or didn't see in Telegram. Target hit. But yeah, just everything else. There's just nothing to look at. It's nice because we're having lovely short live streams, but we're just waffling about crap because there's literally nothing to look at, nothing to talk about. It's just awful. I've never seen a January like it. We're waiting for something to happen. I don't quite know what, because we've got no news this week apart from CPI. I'm just wondering if CPI is going to kick it off on Thursday. Yeah, what do you do? Dead. Market's dead. Look at that. New Zealand dollar CAD. Literally, you could short every yesterday high and long every yesterday low, and you've got a bloody good chance of making money. That's pretty much all you can do at the minute. Awful. Didn't get any trades on the NASDAQ. On NASDAQ. On the UK markets this morning either. Pre-market range was less than 10% of ADR, and the 5-minute opening range was less than 10% of ADR. There was no movement on the indices this morning either, so it's just dead. I don't know. Just dead, isn't it? Look at that range that we had yesterday, US dollar yen. Just rubbish. So I've got on basically all I've had on for the last 3 or 4 days. I've managed to bank 0.35% this morning on Euro Yen. So out of that. Euro Pound in. So that's from last week, from back here. We went sideways for 2 days, did a drop, gone sideways for 2 days. So that's, quarter of an ADR away from break even. Looking for a push up into propulsion to retest that high. I've got pound yen short still. So the yens are working ever so slowly. I mean, it's come down. We're getting there very quietly and slowly. But yeah, pound yen and US dollar yen is at break even again. So got in, got a break even, got a little bit of profit, got a break even. Just don't know. I don't know what to do. Nothing's moving. Can't make any money when there's nothing moving. So just sitting there. I'm not going down 5 minutes because there's no point, but nothing's moving. So I'll be lucky to bank 2.5% this week, but we'll see. We need some movement. No opportunities to get into anything on the hourlies. The Aussie dollar, New Zealand dollar is the only thing really that's decided to make any kind of move so far today. So that is now extended on the 4 hour, but not quite there on the hourly because it's been going sideways, and we've obviously got the ADR hit. There's nothing else getting anywhere close. It's the same as yesterday, wasn't it? I said we're sitting between 40 and 60 on RSI because the market's just not going anywhere. So waiting. So tomorrow morning, we've got the Aussie dollar CPI. That might move it. We got Bailey speaking tomorrow afternoon. But yeah, just sitting here waiting. So we'll see where we go with the US this afternoon. See if we can get some moves on this. We've got a bit of downside momentum going at the moment. Massive rally yesterday. A huge 175 ADRs plus yesterday. Market really pumped. So looking for a pullback. Well, we've done the pullback. So we're 50% already there. 38 on those two. So potentially we could be looking for a new leg up today, but we'll see. Market's about to open in 2 seconds. Here we go. Again, range on the NASDAQ, too small to trade. So not taking anything on the NASDAQ. Short on the Dow. And we'll get into the S&P. So no trade on the NASDAQ. Range on the NASDAQ was 15 points. Minimum I need is 21, which is 10% of ADR. So again, too small, that range there. But I am short the Dow. Looking like I'm going to get hedged. But we'll see. See where we go. Afternoon, AZ. Market is quieter than August. It is at the moment. Bizarre at the minute. Really bizarre. It happens. And then all of a sudden it'll be like ADRs left, right and centre. I get the feeling we're waiting for news on interest rates, and obviously we've got the CPI coming out. So the Aussie might kick the market into movement tomorrow because we're expecting a 0.5% drop on that. If we don't get that, that might move the Aussie, which will move the New Zealand, which will get things moving. But I think we're probably waiting for Thursday for that CPI figure. I'm just surprised the market's not trying to do some kind of midweek reversal move. They're just not even trying to move anything. It's literally, they're not, moving up and then we'll come back on CPI sort of thing. They're just not going anywhere. Just no moves. It's weird, but nothing we can do about it. So NASDAQ 5-minute range is in 30. So I will be getting onto the 5-minute opening range break on the NAS when we've got the initial cash balance in. Afternoon, Martin. Outro. Razvan, watched the bootcamp, but a bit confused about margin, leverage, and lot size. That's babypips.com. If you want to learn about margin, leverage, and lot size, you need to go back. That's super basic trading 101. Bootcamp won't cover basics like that. You need to go back and watch babypips.com if you haven't already, and go and do the course there. Get all the basics under your belt first. Leverage has got nothing to do with anything apart from the amount of positions you can get on, really. Basically, I recommend in the bootcamp using 0.01 per $1,000 in your account. Yeah. Or per $2,000 in your account. Yeah. That's the guide. Or if you use the Market Reversal Alerts EA, that will automatically calculate lot size for you. You don't have to worry about it. But you need a minimum of 1 to 200 leverage. Ideally, 1 to 100 bare minimum. Yeah, forget margin. You don't need to know about margin. Leverage, you need at least 1 to 100, ideally 1 to 200 plus, and then use 0.01 per $1,000 in your account. You could use more. You could use 0.02 per 1,000. That's a little bit more aggressive. Been doing a test on an EA by a YouTuber, Rennie Balkin. Going to do a YouTube video about it. Okay, thanks for that. Morning, Mema. Morning, George. How's the weather? Still snowy. Not snowing anymore, but we've still got snow on the ground. Nice and slippy underfoot. Always good. And it's bloody cold. Freezing. Just took the dog out for a quick walk up to the post office and back. Freezing. Absolutely Arctic out there. But no more snow, unfortunately. Okay, so there's your initial cash balance on the NASDAQ. Dow has broken down. S&P, literally nowhere. So I might get a trade on the NAS. 43, too big. So not going to trade the NASDAQ today. Pre-market range too small. Post-market too big. So I will skip that one today. And trade the Dow and the S&P if we can get a break on the S&P. It's +2 Celsius in Helsinki. Yeah, we're about +3, +4, but with the wind chill factor, it's like -900. We don't deal with the cold in the UK. One snowflake, we shut. Nothing moves. Okay, 5-minute cash balance is in NASDAQ, far too big. 460, 424 is 20% of ADR, so not going to take any trades on the NAS today. Short Dow. And attempting to go long on the S&P, although the S&P range, that is tiny. Look at it. We're an inside bar on the pre-market range on the S&P. No volume. We've done 3.5 points on the S&P. At the open. That's it. Where's all the bankers gone? Do you reckon they've all gone on holiday or something? They've gone, nah, don't fancy it in January. Off we go. Go and do something else. Just no volume, is there? Absolutely dead. Last week was great. This week, flat as a pancake. NASDAQ pulling all the way back down again. Totally dead. They're banking it off somewhere. Yeah, they're just spending their money. They're gone Ferrari shopping. Wow, this is a really quiet open, isn't it? This is like we're waiting for some news. Hopefully we're not going to sit here and wait until Thursday. World Bank forecasts Eurozone 2024 growth at 0.7, so they're forecasting bigger growth than expected on the euro. No news. It's literally financial juice is dead as well. There's nothing coming out of financial juice either. It's very weird. FTNet SIH on Darwin X Dow. Contract size 1. Contract size 1? Range is 36 points. My risk is 0.05 for 100k account. So risk should be 50 euros. Don't know. If it's, I don't know. The EA calculates it automatically. So this is Darwin X, don't forget. You're trading the same thing as me. It will work exactly the same as this. If it doesn't, I've no idea. I can't help you. These people that keep saying their EAs are broken, I don't know. It all works. I've tested it on Darwin X, Robo Forex. I've tested it on prop firms. I can't not make it work. I don't know. If you've got a contract size of 1 and they are not allowing you to trade micros, it will not work. You have to have micros. Other than that, I've no idea. Just don't trade the Dow if it doesn't work. That's all I can say. I can't fix it because it's not broke. So I'm lost. New French PM has been elected. Have they? Why did that not make the news? Not that it really affects the FX market. I suppose it wouldn't do, would it? Wouldn't make the news because it doesn't really have any impact. Surprised it didn't affect the markets. Anybody that you put in front, like, of government, so the prime minister, the president, whatever, they have no impact on financial markets whatsoever. They can talk to cabinet, but the forefront is a puppet, aren't they? Basically, do you think Biden's making decisions? No. Everyone behind Biden's making the decisions and getting Biden to talk, or rather read his cards. It's the same with all countries. The prime minister or the president, they don't make decisions. They have advisors advising them on what to do. So with financial markets, it's central banks, not governments, that really make the decisions. So a change in PM doesn't tend to do a lot. You do get a lot of volatility quite often around it. So when we have elections in the UK, you get quite a lot of volatility. But that's usually just because the markets are pulling a little bit back from greed because of the unknown, but it doesn't really make a lot of difference. So this is dead as a doornail today. Look at it. Look at the spread as well. Huge spread. There's no volume. Look at the spread. No volumes, no liquidity in the market. Look at the spread on the US dollar CAD as well. US dollar CAD's rallying, so we've got some US dollar strength. Or is it? Or is that Canadian weakness? No, it's Canadian weakness. Canadian dollar's dropping. Dead. Wow, look at that. So that's the initial cash balance on the S&P. That's the 10-minute candle. What do you do with that? So we're still inside. So this is the first. I think this is a first. The initial cash balance is inside the opening range. The 5-minute candle after the cash balance is inside the cash balance. So it's not quite an inside bar because we stuck our head above. But we opened and we closed. We didn't even manage to test the low of the initial cash balance on the S&P. Totally dead. It's just... I'll go and work in McDonald's, I suppose. Dow's moving. Well, trying to anyway. It's not an issue with EA. I'm using it on Robo Forex and working perfect. Last few weeks on Darwin, nothing but issues. See, I'm getting better execution and faster execution on Darwin than I was on Robo Forex. I'm having much better response and results on Darwin X than I was on Robo Forex. Weird. Very weird. The position size is just 10 times too high. Okay, well, there's an easy solution to that. Reduce your risk by 10 times and it'll be right. If it's reporting back for some reason 10 times the exposure you should be getting, this is why I say, and I say it all the time, before you put any EA on any chart or you even buy an EA, you download a demo, you put it in the backtester and you test it. Yeah, you test it in the strategy tester. Does it do what you want? Do you like it? Is it looking like it's profitable? Yeah, if so, get it. If not, don't. Yeah, if you put it in the back test and you can't get it to work, don't buy it. Don't get it or don't use it if it's a free one. Just don't, if you put it in the strategy tester and it takes 10 times the volume that you're expecting it to, reduce your risk by 10 times, retest it. There's always a solution. The problem with, like I said yesterday, we had this long conversation about programming. The problem with programming is there's 1,000 ways to program the same thing. Yeah. So with MetaTrader or trading in general, some brokers have no digits. So good example here, look. No digits. So there's no decimal. There's no digits after the decimal. This is 1 digit after the decimal. This is 1 digit after the decimal. Go over to Forex. This is 5 digits after the decimal. A pip is an increment of price movement, and your broker will quote it different. Your broker may say 1 pip is a 0.00001. Another broker will say a pip is a 0.001 on the same instrument. Another broker might say it's a 0.01 is 1 pip. Yeah. So you have to adjust EAs. We can program, and I do program all of my EAs to calculate ADR based on a no decimal, a 1 decimal, a 2, a 3, a 4, and a 5. I don't do anything from anything different to a 0 to a 5 because there is no 6-digit broker that I've found apart from that new thing, deriv.com, which is all made up crap that basically they're just ripping you off. Basically, so that's, not interested. If you want to use it on deriv.com, off you go. It doesn't work. Why? Because I'm saving you money. Don't use it. They're synthetic indices and they are manipulating them. But apart from that, it's coded so that it auto detects how many decimals there are, and then it will say a pip is 1 movement of the furthest decimal. Now, if your broker decides to quote 5 decimals, but that last one never changes and it only increments that will have an impact on how your EA operates. I can't control any of that. MT4 can't control any of that. Your broker quotes this information. Your broker also feeds the EA or the terminal with your account balance and all sorts of other information. That we found on FTMO, they quote a completely different account balance when they're sending it to EAs than it actually appears in your account because it's not real money. It's a demo account. So all of this has to be tested. Everything you do has to be tested in the strategy tester. If it works in the tester using the data of the broker, it will work. If you test it in the tester using tick data from a different broker, you're going to get different results. So again, you have to check that. If you're going to do testing, uncheck. Use tick data if you're using tick data suite, and use your broker's data to test with. Yeah, so there's all sorts of things you've got to check. But none of it's in our control. We can only code in one way. We can only upload things to the marketplace that operate in one way. They won't let us. There's a very strict set of criteria every product launched on the marketplace has to abide by. And if it doesn't, it won't get through. And it's for that purpose, so that it all works on all brokers. But only if the broker allows it. I've got people that have contacted me saying, I'm using the stock index hedge EA. Why is it only taking trades in one direction? Because your broker doesn't allow hedging. Oh, nothing to do with the EA, nothing to do with terminal. It's your broker. They're buggers. Short on the Dow, to our target, about to get hit. Short NASDAQ. No, I'm not. Short on the S&P, sorry. NASDAQ, I'm not doing anything with. So Dow's, we're just approaching ADR as well on the Dow. So just be aware. This looks like an A-shaped recovery to me. And watch this area, which is just shy of ADR on the S&P, which is TP1, which is obviously going to be potentially that resistance if we are going to put a new leg up in. Oh, Dow, don't do this to me. Unless you're Liz Truss, financial market nightmare. Yep. Yeah, but the thing is that Liz Truss made that announcement which crashed the UK economy. Well, it didn't crash the UK. That's what they say. Liz crashed the UK economy. No, she didn't. She crashed the financial markets because they overreacted to what she said she was going to do. I have no idea how that got through. Anybody with half a brain sitting around that table in government when she said, this is what we're going to do, if they didn't speak up, it's their fault. But the Chancellor was sitting next to her, not agreeing with what she said. She overrode him. Yeah. The guy in charge of the economy, she decided not to do that. Why did she get sacked? She was crap. So, yes, prime ministers and changes in government will have an impact, but very rarely because you get idiots coming in. Normally, the new idiot replacing the old idiot is being manipulated from behind by other idiots. So it doesn't make a lot of difference, does it? Who's the idiot in front? Doesn't matter. Has he got blonde hair that goes like that and is completely mental? Doesn't matter. But RPM said he shorted inflation. I don't know. I don't pay any attention to politics. Doesn't matter who you put in charge of the ship. They all steer it into an iceberg at the end of the day. Trouble is, you cannot please the majority. Or the minority. You can't please anybody. Everybody's got a different opinion, haven't they? Dow. We're struggling a little bit to go short here on the Dow. Just missed my target by literally... It's not even a pip. Where's... got 20 seconds left on this candle. The S&P's not able to get out of that low. NASDAQ's rejected the lows, pre-market lows as well. There's not enough volume in this. I'm closing out the Dow. Just over 1.5 hour, basically. We're 15 minutes in. We haven't even broken out of the range from pre-market or the opening cash balance. We're not going anywhere. So that Dow, although it is obviously a nice big sell-off there, I'm not convinced by the momentum at all at the moment. So I'm just going to shut that and take half of that off. If I break even on that, and fine. But this is just not going anywhere, is it? Today. Crappy week this week. At least you're not hedged on the Dow. My offset is too tight today. On the Dow, you couldn't get hedged on the Dow. It never went up. It's only gone down. There's no way you could hedge the Dow, even if you had no offset on that. That was the high there. Even if you include the spread on that, you shouldn't have even got hedged, even if you had it there, surely. Unless your broker obviously spread you up or something. I don't know. Maybe your broker spread you up. I don't know. Dow didn't go long at all. We'll see where we go. So watch this. See if we get a pushback from this level, or whether we're going to be able to break short. If we're breaking short, we're breaking into ADR. The only place to go is down to 125 ADR, which is obviously yesterday's low. So no momentum though, is there? Afternoon, Neo. When doing a back test, if it loses from 2014 to 2016 but makes money year in after, would you use it? I don't know. I need to have a look at what an EA is doing. Look at the market regime in 2014 to 2016. Was the market different? I don't know. You're never going to have an EA that is going to work the same every year. If something doesn't make money for 2 years and then makes money consistently for 6 years, it's got an edge, isn't it? So you'll find there'll be a market regime where the edge won't exist. So if you have a so if you look at the market regime of an instrument, you can see where the averages are. So if we go, where are we? 2017. I don't think I can go back any further than that. Yes, I can. Yeah. So this is going back to 2008. Yeah. So if you look at the average somewhere around there, yeah? The performance there is going to be different to the performance there. Yeah, market regime, totally different. You're going to get a completely different result from an EA there than you will there, which is why it's important to test any strategy across different market regime. Yeah, so if you move forward, yeah, now we've got the average being somewhere around there. Yeah, that would have gone wrong. That's COVID. Yeah, that would have gone wrong. Probably. Yeah. So you just look at the difference. So on that chart there, which is, how long is that? 6 years, yeah? We've had 2 anomalies and the peak was there in 6 years. Yeah. If you go back from 2017, yeah, remember that was the peak. Now look at it. Look how much more volatility there was before 2017. We spiked above it loads. No strategy here is going to perform the same there. If a strategy performs well here, and then it performs well here, with tight liquidity, it's good. It's robust. But if it performs well back there and doesn't perform well here, you know that it is a strategy that's only good in times of high volatility. So you can use an ATR filter on the daily to filter whether or not you should be using that EA or not. Market regime filters, they're called. But that's one of the kind of golden rules in backtesting is make sure you test over different market regimes. You also need to test it when it's trending and test it when it's range bound. Test it in low volume, test it in high volume. If it works and holds up through all of those, great. If it only works when the market is trending, you need a trend filter. If it only works when the market regime is highly volatile, you need a volume filter or a volatility filter, like ATR, average true range. That's the ideal volatility filter, isn't it? You just have to test and test and test. But you'll find 2014 to 2016, you'll probably find something was different on whatever instrument you're trading it on, which is why it didn't perform. And if that's a smaller period than it has performed over, great. Afternoon, Potgoiter. John's in deep thought today. He's using his new Mega Mouse. Wow, that's a big mouse. Why is he in deep thought? He's been beaten up as well. There's a hand problem. He seems to have merged both of his hands together. He's reading his trade journal, isn't he? That is a big mouse. All right, John. John Wick in contemplation. S&P back inside the initial range. NASDAQ back inside the range. Dow inside bar on that 5-minute candle. Nothing's going anywhere today, is it? It's a whitewash. Do you think we'll ever go back to that consistent high volatility? Difficult to know. We probably will at some point. I would imagine. But it's, if you look at the, since we hit COVID, which was here, yeah. No, it's not, sorry, it's back here. That's not COVID. That's COVID. So since we hit COVID, yeah, so you can see the volatility. There's 2 definite areas of volatility there, look. So you've got this range, these peaks. You can't see them because my head's in the way. So you've got these peaks here. And then you've got these slightly higher peaks here. Then we got COVID. And then look at the volatility. See how it dropped from where we were as the high peaks with higher peaks. We never got anywhere near that. Then we had that blip. And since then, yeah, which was September last year, which was kind of when we finished the rate hikes. Since we finished our rate hikes, now look at it. We're even more contracted. This is the most contracted the market has been. I'm just using pound New Zealand as an example because it's a very high volatility pair. It's one of the highest volatility pair. So whether we'll ever get back to that, I don't know. That is interest rate hike finishing. Now we're going into interest rate reduction. So best case scenario, I think, for the next year, 18 months is we're going to get back to that. Will we ever get back to that? I don't know. This is maybe the new norm. If it is, there's not a lot you can do about it. I've survived absolutely fine since COVID with my strategies, so I'm not bothered. To be honest, whether it changes or not, it doesn't matter because everything I do, and this is why I use ADR, everything I do is volatility related. So I use the average daily range of the instruments to take my positions. If the average daily range goes up, that's fine. I adjust. The strategy auto adjusts. This is why ADR is so critical. People that don't use ADR, people that use pips, are never, ever, ever going to succeed when the volatility changes. Because if you're trading something, you're targeting 10 pips, and all of a sudden 10 pips is a 5-minute candle, whereas it used to be an hourly candle, your strategy's out the window. You have to use ADR. You have to adjust the volatility. Because every instrument is different and every instrument's volatility will change. Pound New Zealand, before COVID, we were trading Pound New Zealand at 400 ADR. We are now trading it at 130. This is why ADR is critical. It auto adjusts. Our ADR of 400 we used to hit ADR of 400 is now going to be 200% of ADR, more than that, 225. That would be the norm in 2019. We'd be up here on a daily basis, but we're not anymore. So no idea if we get back there. Hedged on the S&P. It's not a good day to trade today. I didn't trade this morning because the volatility was terrible, and it's terrible this afternoon. So if this can get back down into there, I'm going to shut this out. This will pay for that, and I'm just going to call it quits for the day because this is not moving today in any tradable fashion. It's going to be very difficult to get out of anything today. There's no ADRs hitting. No RSIs extending anywhere. It's just dead. So I think we just have to call it a day today. It's not doing anything, is it? Dead. I found problems as well with the hedging strategy, which I can't overcome. So unfortunately, I'm still working on it. But all the strategy variations that I've come up with that I wanted to trade are causing problems. So we'll go into it in more detail when I've retested them, but tricky. Novelty 0.83 today on the SIH. Only the US 30 today. Good. Good job. I wish I'd just traded the US 30 today. If I can get out of this with a break even across the two, I'll be happy today. One of those days. John Wick was based on a story told by ICT. What? No. Cleaning my AI gallery. There's some messed up pics in there. Yeah, there will be. AI is messed up. I guess RSI is also relative. So things become contracted. Long as it's moving up and down, theoretically, we should still get entries. Yeah. So RSI is, again, this is why I use RSI. I only use dynamic indicators. All of my indicators are dynamic. Yeah, you have to have dynamic indicators. Most indicators are dynamic. Things like moving averages are just measurements. They're absolutely useless for 99% of instances. But RSI is relative strength. So it is the strength of movement up and down between the two instruments. So this will always be dynamic. So if ADR is 10 and it used to be 100, the relative strength, the relative movement will still measure the same. So in a high volatility, high ADR period, this will still move at the same speed because it's the speed of the candlestick movement intraday that causes the relative strength. If you go like that, like that, like that, and like that over a 4-hour period, the relative strength will hit the highs. Whether that is 10 pips or 100 pips is irrelevant. The relative strength between the two is measured dynamically. So this is why RSI works all the time as well, which is why it's used. It's a much slower oscillator than most because it needs a lot to trigger it. Everything sort of happens in slow motion on the RSI. So yeah, ADR and RSI, they're the perfect combo, basically. Well, nothing's perfect, but I mean, they're as good as you're going to get for what's available. But obviously the market's got to move up and down. So, you know, there's an ADR on US dollar CAD. Look, there we go. We've had a bit of movement. So this is Canadian dollar weakness at the moment. Everything's pushing up against the CAD. The US dollar, not really pushing, is it? So this is mainly Canadian dollar weakness. So you've got an ADR reversal at resistance. So if this breaks, the danger here is if this breaks, we've got nothing to stop us until the middle of that propulsion gap. Look, it's clear air. There's literally that there and that there, which you could class as potential accumulations. Apart from that, this is where we're coming to, which is a long way. So if you short that, obviously it could do that on the way there, but it could also, depending on the CPI figure on Thursday, fly straight back up into here. So be a bit careful with this one. Could be a breakout, but it's ever so slightly supporting itself upside, isn't it? But this is the problem with ADR. This is the downside to ADR. Every indicator's got a downside. The downside to ADR is when you are in contracted market conditions, obviously the ADR number drops, therefore the lines are closer together. When you return back to normal volatility, you will get ADR extensions way beyond the norm because this move, if it moves 200 ADR today, we've got a big order coming in, which is bigger than the orders we've had in the last 10 days. That's all it's saying is we've had a big order come in, bigger than the last 10 days. Then ADR will dynamically adjust itself again. So like all indicators, ADR lags price. Everything lags. Everything is this is an average of the last 10 days. This is an average of the last 21 candlesticks. Yeah. Moving averages are the average price over the last X. Everything is telling you what's happened in the past. We know that. We can see it on the chart. But you need something to measure. So Novelty, come back. Come back where? I haven't gone anywhere. I think. Oh, I've gone. Yeah, sorry. I'm back. Sorry, I forgot. I disappeared, didn't I? Here I am. I haven't gone anywhere. Oh, I just missed my exit. I'm getting out. So 113 banked on the Dow. I got a hedge of 128. So I'm down $20 on the day. I can't trade this. It's just every candlestick is giving you the opposite signal. Yeah. So it said to go short, then it gave you a bullish candle, moved up to the highs, then it gave you a bearish signal. Now it's giving you a bullish signal. Next one might be bearish. It's just a mess. Forget it today. Not worth it. Not worth trying to predict something that's hasn't got a clue what it's doing. NQ reminded me of trading in the 2010s. The 2010s? Yeah, nice big move yesterday across the board, which is all completely undone. See, this is, I mean, although we're getting intraday movement, we're not going anywhere. Look, yeah. This is where we opened on Monday. This is where, sorry, on Friday. We had a news event. Yeah. Then we opened there yesterday, rallied up. We haven't gone anywhere. We're back to where we started. Although we're getting volatility, we're getting movement, there is no directional bias because the market has absolutely no clue where the US dollar is going until we get this figure come out. When we get this figure come out, if it comes out as forecast, which is 0.3, the same as before, we're still not going to have a bloody clue which way it's going for another 4 weeks. The whole thing is, at the moment, we're just stuck waiting for news. Can't do anything. Just getting hedged everywhere on the hedging strategy, which is good. So I can test it. ICT, watch your language outro. Exactly. Pound yen. Looked at this morning. In it, short. Looking for a push back down into this area here. Watching that high. But that's what I'm looking to target, which is just 125.8. I'm looking. I mean, the tiny little profit. Just want to get some money on the table at the moment. I'm toying with the idea of just trying to start to take some support resistance bounces as position trades. So basically, when we get sort of like here yesterday, or rather on Friday, when we got there on Friday, stick the EA on the chart and just tell it to take every short. And go short and then scale into a short. Forget about RSI for the minute because we're just not getting any movement. So I'm just worried I'm not going to get any risk on this week, which obviously isn't conducive to making money. But I'll see. I'll give it a couple of days and see if something moves off of the CPI figure this week. I disappeared like the old days, yeah, before I was here. The camera being off was a throwback. Don't understand how people can actually believe a word that comes out of his mouth when he's been caught lying multiple times. I know. When I started looking into ICT stuff, I think it's because I've been around for such a long time. Everything I saw being done there, I could sort of see stuff I kind of knew being taught in a slightly different way, but in a very good way. ICT, I think one of the good things about what he teaches or taught is structure, which is good, and price action, and introducing people to look more into how the banks move the market. Everything he said was bollocks. There is no such thing as an IPDA, an interbank price delivery algorithm. It doesn't exist. Go and ask anybody that's ever worked in any bank or institution what IPDA is. They will look at you blank. Nobody knows about it. It's fictional, made up. Unless someone can prove me wrong. But everybody I know in the banking sector has never heard of the thing, right? So his entire thing was based on the interbank price delivery algorithm that doesn't exist. So initially there was a what? Been around a long time, never heard of that. Well, let's have a look at it. And then it was basically looking at market structure, which is the price moving up and down, bank movement. But he introduced this, when they take the liquidity and go the other way, that's support and resistance. That's been around forever. He introduced what the banks are doing is they're taking all the retail money. They don't know about the retail money. They don't use candlesticks. They use price points and they overshoot them. That's literally all that's happening. So he created a very structured system that rotates around what the market has been doing forever. But he made up a load of crap which overcomplicated it. So everyone went, oh, this is amazing, but nobody understood it. And when you scale it back to what he was saying, it's literally just support and resistance bounce. Yeah, what's this? There. It's a stop run by the banks stealing retail. It's not. It's a double top. It's the banks selling from the previous support level that the sellers took control of. They're reselling and adding to their short positions. It's nothing to do with banks, interbank price delivery algorithm. What is, I can't even remember what it's called, but that thing where it has to be below a line in the middle for you to do that, to go long. I can't remember what he calls it. But I looked at it and I thought, well, that makes sense, but not because there's a word he's made up for it. It's a fib, right? When market moves up and down, it pulls back a percentage. Yeah. So what he's saying is only buy when you're below the 50, when you've had a mean reversion play and the banks are likely to add to the second leg. If he'd have said that, I would have gone, yeah, that makes sense. But what he made up was some crap about buying it in I can't remember the name, the terminology. Just recycling fib. Very clever. But it's bollocks, isn't it? It's all bollocks. Yes, there's a good chance it'll bounce from there, but not because of, what's it called? Someone must have done it that knows what that's called, where there's a line in the middle of a range, and I can't remember what it's called. But anyway, it's like that video that I created about everything being recycled. Everything you are taught is the same as something else. It says he managed to create new terminology that we hadn't heard, and he related it to the banks, and nobody'd done that before. That's where it worked, because he went, this is what the banks are doing. It could be in theory, I guess, but it's not. So yeah, very clever. A load of crap. Uses a stop loss, never going to work. Why can't I delete my fib? Okay. And then he got caught manipulating stuff and lying, didn't he? So, yeah, that was him dead. Although he's still around, isn't he? It's funny how all of a sudden when he got caught out for doing naughty things, all of a sudden then his face appeared. We put a face to the name of the person that we've never seen before in the inner circle, where you had to do 12 months to get his special secret strategies, which I don't even know if they ever did exist. Anyway, I think he's gone MIA after a farewell speech on Twitter last year. Oh, is he? I don't know. I've looked. He'd be on YouTube, wouldn't he? Six months ago. Oh, 3 days ago. Yeah, no, he's still going, that. Model 2, Model 3, bollocks. Anywho. Glad I got out of the Dow. S&P long. So S&P today, if the interbank price delivery algorithm operates correctly today, what they should do is take the liquidity just above that high before pulling back. So if IPTA is actually working today, then that's where we're going. Equilibrium, Evans, there you go. But there's something he called it, wasn't it? So equilibrium is obviously just a mean reversion. It's a 50% retracement to the mean. But there's an area, I can't remember what it's called. He called it something where you only buy in, is it discount or something? Or you have to wait for a price to be discounted? Discount and premium, that's it, yeah. He's just made up words for, if I'm thinking programmer, right? If market pulls back more than 50%, call it premium or discount, take long. If price pushes up, pulls back, and then pushes again, call it discount or premium, and then go short. Or I don't know what it was, but basically all he was doing was saying, if the market's moved up and it pulls back, do that. Use market structure. Market structure's been around since the Chinese invented candlesticks. Yeah, whether you call it now discount because it's below a 50% fib line, it's just teaching the same thing over and over again. But you've overcomplicated it massively. Why not just tell everybody to stick a fib on the chart? If it goes below 50, buy it. Wouldn't that make more sense and be easier rather than inventing the price delivery algorithm that somehow magically makes things happen? I suppose you can't sell a course if you teach people how to use a fib because it comes with MT4. I guess. I don't know. Call me old-fashioned, but I am old-fashioned when it comes to trading. I've seen it all, done it all. Banks trade spot FX and retail trades CFD, but somehow the banks are after our stops. Exactly. The banks don't even trade on our platforms. They can't even take our stops. They don't exist. The only people that take our stops are the brokers because we put them there. Yeah. This is the whole thing about stop runs. How can it be possible for a stop run to happen when the banks can't access our stops? The brokers access our stops. The brokers know where our stops are. The brokers spread us out to take our stops. If you don't put a stop in the market, you can't get stopped out. This is what I keep saying to everybody. The only reason you lose money is because you place an order in the market to lose money. Don't place that order. You won't lose money. Whether the banks go to the level or don't go to the level is irrelevant. Nothing to do with anything. Into buying his material, now he made millions off it. You reckon he made millions off of it? And maybe he did. I don't know. Very hard to make millions. Apart from Greg Secker, he's made millions teaching people how to do stuff, but he hasn't made millions teaching people. He's made millions selling them his software and his brokerage. Very clever. Again, there's a lot of clever people in this industry, but none of them trade. Thanks for subscribing. Shh. That's not a good name, is it? Shh. You telling me to shh, or are you subscribing because you want to join the channel? Welcome aboard anyway. It's all nonsense. Price does two things, ranges and trends. Yeah, exactly. Exactly. This is it. There's a guy out there, I can't remember his name, who is an ex-floor trader. And he's got it spot on. His strategy, I can't remember, it's called this. Oh, yeah, it's called the Strat. You might know, you might have heard of him, the Strat. And he's an ex-floor trader. And he's got it spot on. There's only three things price does. It's either bullish, bearish, or it's not. That's it. That's his strategy. His strategy revolves around a candlestick, and it's brilliant. It's very simple. You get a candlestick. Yeah. If it closes above there and the low is higher than that, it's bullish. If it closes below that and the close is down there, it's bearish. If the high and the low is inside that, it's not either. That's it. Market goes up, market goes down, market moves through time. Exactly what I've been saying all along. All it does, goes up, goes down through time. You have no way of knowing where it's going. You have no control over where it's going. Forget the interbank price delivery algorithm. What's his name? The guy that does the Strat? I can't remember. Rob Smith. Very, very, very nondescript name, isn't it? Robert, probably one of the most popular Christian names. Smith, the most popular Christian surname in the UK. But yeah, I mean, that's his strategy. It's very, very simple. Look, it's exactly what I, keep going on about. 1-2D inside break. 1-2 up, 1-2 down. Yeah, it's either going to do that, then that, or it's going to do that, then that, or it's going to do that, then that, or it could do that and then that, which is the same as that. It's indecision, not going anywhere. Yeah, bullish, bearish, sideways. But all revolves around a stop loss, and you get stopped out all the time, because the downside to this strategy is, you get that, you take that break, then that candle that broke long, why are you going long? What's the chances of, after you've taken that break, it doing that? 50-50. Every time you take exactly, if you take a candlestick break to the upside, you're long. You put a stop loss. If it breaks down and stops you out and then goes long, what have you done? Lost money. Why? Because you used a stop loss. It's exactly the same as every other strategy under the sun. It's teaching you price action with a stop loss. So therefore it gets stopped out all the time. There's a number of people out there on YouTube giving you variations of the strat. But this guy used to work on the floor, and he would use momentum. And that's all he's doing. He's using, it's exactly the same as the stock index hedge strategy. It's momentum based. There, we're starting there. We're going short. We're going short because we're going short. Market's going short. When the market stops going short, we go long. That's all you do in the pits. When you're a stock trader at the pits, you hear open outcry, everyone going, buy, 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 buy. So you buy because everybody's buying. If everybody's buying, it's going up. So you buy. When you hear it go quiet, you stop. And you wait. Are they buying again or selling it? They're selling. Right, I'm going to sell. That's all he's doing. He's just converted it into candlesticks. You get a candlestick. If it breaks above that high, everyone's buying. So you buy. If it breaks low, you go short. When the momentum goes back the other way, you get out. So what you hope for is two candlesticks going in the same direction to profit. If that doesn't happen, you lose. Simple strategy. Uses a stop loss. So therefore, you get stopped out and you lose money, as they all do. The banks don't care about my 0.01 lot for $3. No. Your broker does, though. You'll have, yeah. But yeah. So not going anywhere today. So I'm out of that, and I'm just going to shut this, to be honest. I can't. I can't really do an awful lot today because this market's just not moving. So I'm going flat. And just take that sell stop off. So yeah, I'm just basically going to take a $20 loss, $29 loss today. But if you want to trade it, if you're in the, you should be out the Dow, because that candlestick there actually hit target 2R anyway. If you're using the same as me, if you're just going for a 2R break, you would have hit target on that, and you'd have stopped out in the second half. If you did take the S&P and you're hedged, all you can do really is look at yesterday's high for an upside resistance, and downside resistance look just before ADR, which is the previous day's high, which is that dotted line there. So previous day's high, potential for resistance bounce, support bounce, and then resistance bounce at the highs. But I mean, there's no volume, so I suspect you won't get there today. Ain't going anywhere. And we've got no ADRs. Really, apart from that US dollar CAD that's just hit the Aussie New Zealand's flip-flopping. That looks like that's just reversing. But nothing. It's just dead, isn't it? So, meh. Nothing we can do. We just have to sit and wait. So that's all I've got today. Hopefully we get some moves tomorrow, because it's been a bit of a flat day today. I've literally banked $29 loss and made $170 odd there. So struggling to make money at the minute, but not a lot you can do. I bet the Dow will now scream down to 5R just to mock us. Quite possibly, yeah. It's always the way when you get out. But we're an hour in to the session. It's just not doing it today, is it? You get days like this, you just have to sit there and just get on with something else. So I've got coding to do and testing to do. So this hedging strategy, just before I go, on paper, it's working very well. And it's producing alpha very well. The problem is the time it takes to play out these hedges is astronomical. Some of these hedges will last months, and I can't figure out a way to get out of them any quicker. So I'm going to continue forward testing this as it is at the moment, and I'm going to manually manage any large hedges. So like this CAD yen. Well, so this is now trailing stop because it's broken down. So we are trailing this. So basically, if this pushes up now, it's going to close out that short, and we're going to hope that it pushes back up into get us out of that position up there. But the problem is when you get these and they just get wider and wider and wider, the only way to work them is from the inside, which I have no problem with. I understand the strategy of hedging and working hedges from the inside to get out of them. The problem is when you get into a trend like this, all that happens is it widens, and then you get a range which forms, and you can be stuck in it for anything up to what I've seen 2 months, where you don't get an opportunity to work the hedge. So what you end up doing is sitting in something, making no money, in constant loss, or drawdown rather, for months. My idea of managing risk and exposure is good if we don't get hedged for a long period of time, because then you lose the ability to make money there. And if that does the same, you lose the ability to make money there. What you're then stuck with is not a lot to trade with small opportunities. This is where I'm hitting the Achilles heel in this strategy that I'm developing. So I'm going to carry on running this as it is at the moment, but my back testing is showing problems getting out of these hedges. I have a solution, but it uses it doesn't use martingale. It uses lot increments, but I feel that would be very risky. So I'm doing a little bit more testing on it, which is annoying because before Christmas it was all looking really, really good. But today I've kind of, it's not so much a problem. It still works. But I did a back test over 8 months, and it made, when you look at the equity curve on it, goes like this. So you start there, it goes like this. Exit the hedge, made that much. That's 2.5 months. Rally, drop, 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 push. Ends up making about $1,200. On paper, it's like, oh, that's pretty good. In reality, would you sit there for 2.5 months making no money? That's the downside to the strategy. Long term, beautiful edge. Short term, it's one of these things where you would just sit in that and go, come on. And it will gradually build this for you, but this will build along with that. So it's this is the problem. So I'm running different strategy variations to see if there's a way of minimizing the time in trades. I've done it, but it's using very high risk. And you might as well just use the H1 hedging strategy with the market reverse alerts EA, because it does the same thing, goes into big drawdown. So we will see. By the way, Apex is offering 1 day to pass evaluation with 71% off the price. That's gambling though, Brian. But it's all gambling, isn't it? But it's $40 for 25k. Yeah. But they use a trailing drawdown, don't they? So if you have a big run up and drop, you're out. Trouble with Apex. That's why it's cheap. They're a volume. They're like the Poundland of prop firms. I used to love them. There goes, stopped out on that. So made a little bit of a loss there because we've done some drawdown control. So if this pushes up now, we'll trail up. And then ideally what I want it to do is break short and drop, because that's going to be 1.9 and that is 0.98 long. So I want to go south. But look how long it's taken, yeah? Started this hedge 2 days ago on the CAD yen. And I'm still sitting in 3% of drawdown on it. Yes, I've banked, but I've just made a little bit of a loss there. Yeah, it's a painful thing to trade, hedging. Much more painful than position trading, I'm discovering. This is the trouble with backtesting and why I hate backtesting. You see a backtest looks like that, and then you suddenly realize, oh, but this period here for 4 months, it didn't make money. This is what kills you, sitting through this 4 months of no capital gain. Love long term, but short term, horrible. Anyway, I'll update you when I've tested it a bit more. Could you not just drop time frame? Yeah, I've been I'm testing at the moment on M15. I don't think this version is actually working. Yeah, no, I've broken it. This version's not working. Whee! Yeah, I've dropped time frame. But what that does is it increases the speed the hedge grows by. I thought it would be a solution to getting out quicker, but what it actually does is it exponentially grows the hedge faster. It's the opposite of what I thought would happen, which is annoying. But I mean, when the trades work, they work very, very, very well. But when the hedges fail, they just grind away for days and weeks and months. So it either makes a lot of money very, very quick, or it grinds the crap out of your account for a long period of time. It doesn't make a massive loss. I haven't run any variation of strategy where it's made a dramatic loss at all. But I have got lots of versions where it just grinds for a long period of time. Saying that, this one obviously isn't going to do it now that I'm showing you. So this is up 10%, 11% in 8 trades. But this is what kills you. Look, you sit there for 2 days and then you just get hedged after day 2. So that should be trailing. That's not working. I've broken the logic. But and a little bit more. But yeah, I need to play around with it basically. I've got a lot of strategies like this, which I've got to the point where I'm like looking really, really good, and then all of a sudden I find the problem And you don't find the problem until you've done loads and loads and loads and loads of testing. It's like all strategies. Everything works for a short period of time and then it fails. He says this one just carries on making money. But a lot of this is a fluky time, I think. And it's not working properly either for some reason. Should be squeezing the hedge down, but it's not. Broke it. I might have accidentally found a really good strategy. Look, up 15%. No, I'm not. I'm up 7%. Sorry. Anyway, I think we just got an alert there. Aussie New Zealand 125. So just pushing down further on that Aussie New Zealand, broken out those lows, coming down into this low here, and basically just into this propulsion. So looking for a buy out of here, up into there. But yeah, anyway, I'll let you know on that. What broker do they use? Apex is, they don't use a broker. It's CME. You're trading futures, so you're trading on this CME. Couldn't you have a max number of days for a hedge after which you get out? Yeah, you could do, but I think what you'll because the way the market works, because the market moves up and down all the time. Yeah, you get hedged a lot. So if you are just closing these hedges out, all you're doing is you're just going to take a loss on a number of trades. And how many days do you wait? How many days is an accumulation going to last? It's random. So you can't do that. It doesn't work that way. It's a very hard thing to do. This is what I said. Hedging is great on paper, and a lot of people that teach hedging strategies, it looks good and it works well for a period of time, and then they go silent because it doesn't work anymore. Because when the market goes into a strong move, you are left with something that is just getting bigger and bigger and bigger and bigger into drawdown. That's the problem. Exiting a hedge is very, very difficult. So it's to say you might as well use a stop loss. Yeah. If you go short there, you either put a hedge there or a stop there. If it comes up there, it stops you out. If it comes up there and you go long, you still don't know which way it's going. So what you've done is you've just made sure that the next trade that you take has more risk when you hedge. But there is a possibility of getting out on the pullback. The problem occurs when it does that, because your hedge just gets bigger and bigger and bigger. And that's the problem. If you don't get that, when the way you get out of a hedge is when it's big like this, when it pulls back into here, you re-hedge. You do what's called an inside hedge. Yeah. And you use the profit from the inside hedge to pay off the outside hedge. And that reduces the hedge size down until it's disappeared. And you just take profit from it. If you get something that moves like that for 6 weeks, you never get an opportunity to work the inside hedge. And the inside hedge is what pays for the hedge. So if you just get stuck. On paper, works beautifully. In reality, when you actually watch it play out, there's a big problem with it. Apart from if you use some kind of position trading and lot multiplication system, then you can get out. But if you're going to do that, you might as well just position trade. This is what I'm finding. What is the use? What is you use DCA position trading style to get out of a hedge. Oh, I think I've just answered that one, haven't I? The most success I have found personally with hedging strat is with 2 opposing accounts. Yeah, well, you can do that, but you're forced to do that if you've got FIFO rules anyway. So there's lots of hedging strategies that work on... so this is a good example. There's lots of hedging strategies that work on opposite currencies. But the problem is, if you get everything go range bound, all you do is you lock that in. You can't get out of it. So it's a very... It's kind of like arbitrage in that way. It doesn't work. The most success I've found personally with hedging... Yeah, that's that. What about using a grid style system to trade between the 70 and 30 RSI? No. Grid trading systems don't work. Not that I've found anyway. What do you think about the soft landing for the indices? I don't even know what that means, Charla. What is a soft landing for the indices? They go up and down. I don't know what a soft landing would entail. Right, I'm going to leave it there because I'm just waffling now. I just literally flip-flopping. This P&L is just flip-flopping at the minute. So I'll be back tomorrow and we'll have a look at how everything's going, if it's going anywhere. They were talking about it on Bloomberg. Oh, definitely listen to what they say on Bloomberg because they know where the future's going. They know the future in Bloomberg. They know exactly which way the market's going. Listen to them. Yeah. When they say buy, buy. When they say sell, sell. See what happens. Yeah. So we'll see where we go tomorrow. So there's no trades this afternoon. I'm out of all everything this afternoon. Flat, pretty much. This morning there was nothing. Nothing's moved today. So we're just waiting for news. So fingers crossed. Tomorrow morning we get some movement on the Aussie dollar. We get some RSI extensions that we can actually use to get some mean reversion trades on. So we'll see what happens there. We're forecasting a 4.4. If we get anything higher than a 4.4, we'll get a rally. If we get anything lower than a 4.4, we'll probably get a drop. So we'll see what happens. If we get a 4.4, God help us, we'll probably just go sideways for the next 6 weeks. Then we got Bailey tomorrow afternoon. So we've got 2 news events that may or may not kickstart some kind of movement. But I think we're waiting for Thursday by the looks of things. The market's not interested in doing anything, and that'll be our catalyst this week. So we'll wait and see what happens there. Blow your account, Bloomberg. Yeah. Don't listen to anybody. Literally, don't listen to me. I have no idea. No one has any idea where the markets are going. Yeah. A soft landing is pretty much the same as the interbank price delivery algorithm. What does it mean? Nothing. It's going up, it's going down, it's moving through time. Your guess is as good as mine. All right. Have a good afternoon. I'll be back tomorrow morning, 7:50, and tomorrow afternoon, 2:20, and we'll see where we're going then. All right. Have a good one.